Mike Mayo is here, Managing Director and Senior Banking Analyst at Wells Fargo. It's very nice to see you in person. It's been a long, long time. We were talking about Goldman Sachs this morning. Husan had a report out about their ending, effectively, their branded credit card. I think we knew generally that they were trying to get out of this sort of consumer space more broadly. What do you make of sort of the transition there and what's happening?
Well, let's pull the lens back a little bit. Goldman Sachs has its second investor day in history in 2 weeks, and we want answers. One thing is their returns. Fourth quarter was miserable. They missed their financial targets last year. They're likely to miss them this year. I get all choked up by talking about this, such a premier firm. The second thing is the consumer spending. Why do they spend so much for so long to expand their consumer business? And why do they allow headcount to become bloated, up 1/4 over 3 years? A third issue would be culture. How is morale? What is the turnover around the partnership ranks? And the fourth would be this press that has been out there. Why hasn't Goldman Sachs gotten ahead of the narrative? So the big picture is 70% of Goldman is killing it. That's the legacy, 154-year-old investment banking and trading, best in class. They've grown twice the pace of peers. But that other 30%, and especially that consumer part, which is 3% of the company, like, wow, what a terrible decision a few years ago to expand. So the only question.
So what do you want to hear then? Because I think they've said mistakes were made, right?
Yeah.
So I guess my question to you is, if they say that again, does that suffice? What do you need to hear?
Well, I'd like to know about the financial discipline, and to the extent that this is a microcosm for how they make decisions. So why were they allowed to lose billions of dollars in expanding the consumer business without someone stepping in and saying enough? And this transcends the current CEO. This started with Lloyd Blankfein, and he hyped the business. He was saying how he was talking to the person in the street, and they're a Goldman Sachs customer. And David Solomon, the current CEO, leaned in, but at least he's cutting the losses now. So I want to know what broke down in the financial controls that allowed them to spend so much for so long.
Stocks moved back up. It's at about 371. What do you think it's worth?
I think it could get close to its all-time high. That's around 420, 430 over the next year. You have this investor day coming up. Depending on how they answer some of these questions will make a difference. The most important question is, how will they improve their return from 11% last year up to their target of 15%? So I would like for them to mention the benefits they get from the headcount reductions, to mention the benefit they get from pulling back from their consumer expansion, and to mention what they can do about the most onerous capital requirements on any large bank. So why aren't they doing more about that?
Of the banks out there today, if you could own one, which bank would you own?
I would own Bank of America here. That's, Goldman Sachs in a way was trying to become Bank of America. It's not happening. They're pulling back. Great.
Do you think Goldman Sachs was really ever trying to become Bank of America? I mean, you think they were ever going to have branches on the corners of every street?
No, they were never trying to do that. They were trying to become a fintech. They were trying to become the 21st century digital storefront for the consumer. But to the extent that you're going to win in the consumer business, the idea that Goldman Sachs was going to have sustainable relationships. Goldman Sachs is a company that was born out of relationships. And they were leading with consumer with a savings product and with a consumer lending product. Which other financial firms have formed sustainable relationships with those two products? Zero. Nobody. You can at least, JP Morgan's expanding in the UK digitally. At least they're leading with checking.